So another thing is licensing. You have your business. How do you get a license? What is a license anyway? And why do you need a license? You cannot operate any business in any country without the government or the country licensing you, without the government giving you permission to operate your business. So a license is permission. A certificate of incorporation is proof of existence of your company or your business. Then a license is permission by the government or by the country to start operations or to start running your business. So for you to get a license, you apply for it by specifically stating the category of your business. If your business is supposed to be run in a city or urban authority, then you apply to the urban authority. Let's say a city authority or municipal council or town council. If your business is to be operated in a rural area, then you apply to the local government responsible for that area, usually a town council or a town board. So that's what concerns a license. So when your license expires, a license is issued annually. It's per year. When it expires, you are supposed to renew it for you to continue your operations. Yes, so that's something concerning licensing. So let's go to management, business management. The business may not necessarily be run by its owner or director. The business can have a manager, can have an employee, someone employed specifically to handle duties, certain duties for the business to operate, to exist. So that's what they call management. You may have a manager or other workers. So for you to legally have employees, you are supposed to advertise for the job so that people compete for the job. People apply for the job and compete. You apply, you advertise, you state qualifications that you want. Then people should apply and compete for the job, and you choose the best person, the person suitable for the job. Then you employ such a person. How do you employ? How do you engage someone? There should be a document, something to show that you have employed someone in your company. This document is called an employment contract. signed by the employer and the employee, or the employee and the representative of the employer. So that is management of the company business. So finally, let's look at taxes. As you run your business, you are supposed to pay taxes to the government so that the government can able run work for the country. The government can smoothly run the country. The government runs the country using the taxes that we pay. So, if you have a business, if you are a business owner, it is imperative on you to pay taxes to the government so that the government can run the country. There are different types of taxes under the Income Tax Act, and okay, these are types of taxes. There is income tax, there is excise duty, there is motor vehicle ownership tax. So there is stamp duty, something called stamp duty. Some things pay stamp duty and other things do not pay stamp duty. So as you run your business, you should be mindful of keeping your books of accounts. How you spend in the business, how you earn, so that you get to know your income, your expenses, your net profit. Because the taxes are based, determining how much tax to pay is based on the profits of your business. So you should be able to keep properly your books of accounts. Now there is something called IFRS that was recently introduced, which has made many business people to cry. Yes. So that is to do with taxation. How do you start paying taxes? There is what they call registering for taxes. Registering for taxes means applying for a tax identification number, which is commonly known as a TIN number. A company can get a TIN, tax identification number, and an individual can also get a tax identification number or a TIN number. So when you get a TIN, it is proof that you have registered for taxes, and that's when you start paying for paying the taxes. Yes. So when you get this TIN number, Uganda Revenue, the TIN number is issued by Uganda Revenue Authority, which is mandated under the law to collect taxes. So when you get this TIN number, after some time, when you check in your email, in the email that you use to get the TIN number, you will find there an assessment of a tax you are supposed to pay. This assessment is generated on the assumption that you are operating your business and you are making a profit. Your business is running. So as your business runs, you are supposed to pay a tax to the government. So this is an assessment that is made by URA without looking at your books of accounts. So this assessment, when you pay it, then it means you have filed a return. You are supposed to pay what they call a tax return per year to the tax body. So you can do what they call a self-assessment, or you can pay the assessment that has been issued by URA. So when you pay this return and other taxes that have been assessed, you get what they call a tax clearance. Sometimes when you have gone for bidding, they will ask you for a tax clearance. A tax clearance is a document that shows proof of you being tax compliant. It is this document that will allow you to get some opportunities. So you are obliged, you are required to pay taxes and to get tax clearances so that you are tax compliant. So that is about that. So when you get this assessment from Uganda Revenue Authority, sometimes it is much and you feel you cannot pay that money. So under the law, you have a right to object to this assessment. So when you object to the assessment, you are supposed to notify the Commissioner General that, please, I received this assessment, but I object to it, and these are grounds for my objection. My business has not been running. I have not generated income or profits. These are my books of accounts. I cannot pay this tax. Then the Commissioner General will look at your objection and you will be given an assessment of the appropriate tax you should pay. And if there is no resolution or there is no agreement to that effect, then matters go up to tax tribunals. There is a tax appeals tribunal. Then there is High Court. Yeah. So when you get tax disputes, you go through those channels. So let's go back to company management. Like I already said, that the company speaks through its directors, its shareholders. The company makes a decision after a meeting. It can be a meeting of shareholders or a meeting of directors, depending on what is going to be made, the decision that is going to be taken. When it is a general meeting, then it means that the members, the shareholders of the company, should sit and pass a resolution, make a decision and pass a resolution. So a resolution is a proof of a decision that has been taken by a company. So that is how the company speaks, through meetings, through resolutions. So when it is a general meeting, it means the resolution that will be passed is called an ordinary resolution or a special resolution. When a meeting is an extraordinary general meeting under Section 148 of the Companies Act, then the resolution that is passed is a special resolution. Then when a meeting is an annual general meeting, then it means the resolution that will be passed is an ordinary resolution. Yes, when a meeting is a board of directors meeting, it means the resolution that will be passed is a board resolution. So the directors pass only one resolution, which is a board resolution. The directors do not pass a special resolution. The directors do not pass an ordinary resolution. The directors pass a board resolution. Yes. So some people do not understand the difference between these resolutions. Under Section 132 of the Companies Act, Section 132, a company is required to file a return with Uganda Registration Services Bureau. This return is different from a return that is filed with Uganda Revenue Authority. Some people do not understand the meaning, the difference between those returns. So under Section 132 of the Companies Act, Cap 106, a company is required to update the registrar of companies every year about the status of the company, the status of the officers of the company. Are there new directors? Are there new shareholders? Is there a new auditor? Is there a new company secretary? These are the details that should be contained in an annual return document that is filed with the registrar of companies under Section 132 of the Companies Act, which should be done every single year. Yes. So, meetings. How is a company meeting called? How is it convened? There is what we call a notice for the meeting, a notice for the general meeting. A notice is usually not supposed to be less than 21 days. Under the law, a notice for the general meeting is not supposed to be called before the expiry of 21 days. What does that mean? It means that when you, as a company secretary, when you issue a notice calling for the general meeting of the company, if you have issued it today, 22nd of August 2025, then the general meeting should not take place before the expiry of 21 days from today. That's what they mean by a notice period of 21 days. Yes. So a notice should have the agenda of the meeting. A notice for the general meeting should communicate the agenda, should communicate what shall be deliberated upon at the general meeting. That's what we mean by the agenda. And it should be served on every officer of the company individually. Yes. That is to do with calling of meetings.